Any views or opinions expressed in this podcast are strictly the views or opinions of the presenter. Nothing in here is the view of the firms, corporations, financial entities that anybody represents. Nothing expressed here is a view of any regulator or semi-regulatory agency. All content is intended to be educational. Nothing in this episode construes specific investment advice, and if you do require advice, you should seek an appropriate advisor, be that a financial planner or a tax advisor or possibly a lawyer.
And welcome back to the CE Drive podcast. This is Jason Watt, and in this episode, I'm going to be talking with Gino Stirpe from VUMI. VUMI is a VIP health insurance provider, and the episode is going to be good for life insurance credits in all jurisdictions except Alberta, where it'll be good for one ANS credit, no life credit in Alberta. It'll be good for a financial planning credit. We'll submit it with Advocates for an IAS credit. We won't submit it for IROC or MFDA credits. I don't think it'll meet their criteria for either IROC or MFDA. So lots of insurance credits here, including that Alberta ANS credit, but no securities credits. Okay, the object for this episode, I'm at another conference this week and I picked up some swag. I have a teddy bear here, an e-money teddy bear, which is a US financial services provider that generally people who are aware of say, I wish we had that or something like it in Canada. So the object is a teddy bear, an e-money teddy bear. And I've got more to follow. You're going to hear a lot about not necessarily e-money specifically, but I've already found some really cool stuff at this conference I'm at. And just like I will do, you'll hear this later on, with the Institute of Advanced Financial Planners Conference, I'm also going to do a podcast episode specifically on the Financial Therapy Association. Okay, so we're going to roll into the interview here. The interview is relatively short, so I have some follow-on comments, and I'm going to talk about some stuff that's been happening on the FSRA front lately. So I've got quite a bit following this, but let's launch into the interview here. I enjoy the interview here. This is an area that I don't really know that much about. I consider myself a bit of an insurance nerd, and I have seen some of these products over the years, but I've never really had the chance to get to talk to somebody about, deductibles and underwriting and a bunch of the stuff that Gino talked about here. So I was grateful for the opportunity. I hope you find it valuable. I am curious to know, and I'd love to hear feedback on this, whether it was good or bad, or how we perceive this to have a specific product provider on the call. The challenge I have here is that with products like this, I find really the only way to get to know them is to talk to the product providers. I find lots of people out there are selling them, but the people who sell them typically, they got the pitch. They said, yeah, I get it. I get where it fits. And they don't necessarily get to be experts at it. That is different than travel insurance. And I am going to get somebody on the podcast here to talk about travel insurance. Actually, I'm going to reach out to my own travel insurance agent. All right, with that, let's roll into the interview. Hi, I'm here today with Gino Stirpe. Gino is the, I think, CEO of VUMI Canada. Gino, I got that right?
Vice President.
Perfect. All right, sorry about that. So can you tell us a little bit about who you are and what you do, Gino?
Perfect. Yes. Thank you, Jason. Name is Gino Stirpe. I'm heading up VUMI Canada here. Been in the insurance industry for 33 years now, and the last 7-8 years with a big focus on this international private medical insurance space, particularly for this type of product.
Perfect. And can you tell us just I know a lot of people out there will know what VUMI is, but I don't think everybody will. So what is VUMI?
Great. Okay. VUMI, actually what it stands for is VIP Universal Medical Insurance. The name is our game.
All right. That's easy. And who is your ideal client then, Gino?
Ideal client, Jason, is everyone from a custom staircase factory that does carpentry work all the way to the C-suite executive, Bay Street, law firm, for the partner level. Typically, this product is sold on a group basis, but it is available threefold. We'll get into that, a little bit later. But to answer your question, like who is the ideal candidate? It's everyone who cannot afford to wait in the Canadian medical healthcare system, and who is willing and wanting to go seek treatment abroad.
Okay, and obviously then you have some case studies here, some sort of good outcome stories. What do you have for us here?
We do. Yeah. So we've had some few claims. It's 3 years now since we've launched VUMI here in Canada. So some success stories. We've had one individual just recently. He was at a water skiing accident, right? He tore his quadriceps, and he had to wait 3 weeks for an MRI, right? So he's walking around with crutches. And he's like, he had our insurance, wasn't sure if we would pay or not because it was a water skiing accident. Wasn't, calls the broker calls me, says, no, that's all good. And, we gave him a list of 3 places to go to the US. He picked one of the top centers of excellence. He met with the orthopedic surgeon. They got the MRI done in day 1. He got the surgery done in day 2. It was about $150,000 American dollar claim we paid. Client was responsible for his $5,000 deductible. And so that was one of our most recent claims.
Yeah, that's a great example. Just sounds fairly straightforward. I do have a question here, and this is off topic already, Gino. So just when you talk about water skiing accidents, and I don't know what's wrong with me here, but I immediately think about alcohol. And I'm wondering, because with travel insurance, one of the sort of big sources of exclusion here, and I know this is not a travel insurance policy, we'll get to that later on, but with travel insurance, alcohol can be a big exclusion. Do you have exclusions here based on the cause, Gino? Are we looking at that kind of thing?
We do. We do have your basic, exclusions. So yes, if it's, if you're impaired, or if you're, like in the midst of committing an indictable offense and something happens, and, we won't pay. Those are typical exclusions, right? Like water ski, is not considered a hazardous activity, right? But mountain heli country skiing would be considered that, right? Bungee jumping, skydiving, right? If you break a leg skydiving, just don't expect us to pay the claim to get your leg fixed because you want to do something, like.
Fair enough. Yeah. So sort of similar to what you might see on, say, a disability insurance policy in terms of exclusions then, or even on travel insurance maybe. So, okay, thanks. Yeah. I should have thought about that question. I can't believe I didn't. All right. Sorry, in advance. So now what about underwriting then? If we're going to talk about exclusions, then it seems maybe I should have asked about underwriting first. So what do people get underwritten for? What causes, let's say, issues at underwriting?
Okay. Good question, Jason. So underwriting, our product's available twofold. Individual, which is a fully underwritten contract. So it's much like a disability insurance contract at that time. That's how it gets underwritten. So you're going to answer the medical questions. Okay. There's no medical evidence required up to the age of 65. 65 and older, we will require a recent, blood work and a recent ECG. Okay. So that's 2 things we'd want to look at. And one other one for female and one other one for males, like prostate, like PSA levels, a recent check. So we want that data if it's less than 1 year old. Okay. So that's the only medical evidence that you have to supply us, again, over the age of 65. 65 and under, basic medical questions. You're gonna tell us how much you weigh, how tall you are. You're going to answer yes or no, like no to anything. Anything you answer yes to, the underwriter will typically look at it and they'll make a decision, right? If it's, based on how you answer, what kind of detailed information you give. So typically things can be excluded. So when you're fully underwritten, certain ailments would be excluded. So if you're overweight, you have high cholesterol, you take blood pressure medication, there's a good chance you'd have this dyslipidemia exclusion. So anything to do with heart, circulatory, stroke. Okay, would would be excluded. If you're not overweight, you're controlled with blood meds, good chance you're going to be covered, for something like that. But if you have too many things going against you, then the answer would be no. So that piece would be carved out of your policy, right? When you're being fully underwritten. On a group level, there's no underwriting. Okay, a minimum 3 people to form a group. Okay, there's what we have is what's called in the industry a 24/24 pre-ex. So there's a 24-month waiting period on anything that's deemed to be a pre-existing condition. And our definition of pre-existing is anything you sought advice for, received treatment, you're on medication for, would typically be an excluded condition.
And anybody who's in the group space will know that that's a common enough exclusion in group.
Absolutely.
So that the 24/24 is from the time of placement of the ViewMe contract, not for the overall group. Like if there's already been
the effective start date of the policy.
Perfect.
So like just to give an example, if someone has prostate cancer today, they buy our policy tomorrow, they would need to wait 24 months and 1 day, and then he could seek some advice and treatment for prostate cancer.
For claim related. Got it. Yeah. And do you assume, like, does this only work where there's already another group insurance contract in place, or do you have groups that have like only this coverage? Would you ever see that, Gino?
No. Typically, groups in Canada have the full suite traditional group benefits plan. Remember, this plan is not designed to get your teeth cleaned or pay for your meds and buy you eyeglasses, but it would pay for a detached retina. It would for surgery, right? It would pay the millions of dollars to get you fixed. And it gives you access to U.S. medical healthcare where they have better technologies and whatnot, right?
Yeah. Fair enough. Yeah. And the underwriting here, is this, do you have in-house underwriting? Do you contract it out? Is it Humania that does your underwriting when on that individual case?
No, it's done out of our Miami headquarters. Yeah.
Oh, nice. Okay. Yeah, that's cool. I had no idea. I didn't know what the relationship was like here exactly with, Humania or however. So that's good. Thanks.
Humania's our partner. Humania is our partner here in Canada.
Fair enough. Yeah. And how are claims adjudicated then? So what's the exact sort of process for the claimant? How do they get through that? And what's your response to that?
Okay, good. Good question. So it's a little bit detailed, so it's a little bit lengthy of a response, this kind of question. So if it's a claim, and if it's a catastrophic claim in the first 2 years, right, the back office will do like an OHIP record search. So they're going to just make sure that, someone's not trying to defraud us, right? Before we issue a GOP, like the guarantee of payment, because we can issue that GOP within 24 hours, right? If it's after 2 years, right? So if it's a claim is coming in after 2 years, or it was an acute injury, like, something, right? Then of course it's something that's covered like immediately, right? But if it's, they buy the policy, oh, by the way, all of a sudden this cancer comes out or back pain, and now he needs a, discectomy, $250,000 spinal surgery, bill. Just want to make sure that, nothing has happened in the last, 24 months. So that's sort of like that underwriting, qualifying. So we call that pre-certification. So before, it's just like when, you get into a car accident, right? You don't go get your car, you don't bring it to get fixed, and you say, fix it, and then you send the bill to the insurance company. No, you notify, the insurance company, say, listen, involved in a car accident, the car was towed over here, it's sitting over there, that's, so you'd call, get pre-certified. We issue the GOP. Client's never out of pocket, right? Other than their deductible. Right?
Perfect. That guarantee of payment, then, like the client would take that to whatever healthcare
we
provider.
We send that to the facility wherever the client's going to be going to be treated. Letting them know, listen, client, our insured here is fully covered, and they go in, they put in the fee codes, right? They have fee codes for each of the procedures, and then there's the allotted, the allowed expense that gets paid.
So, there's like, I have, different levels of experience with this, right? So, if it's something, I'm going to use my wife's example because we've gone through this a bunch this year. Listeners to this podcast will be aware of this. Okay. And, my wife went in with sort of unexpected new seizures in February. That was our first real major visit to hospital. And she had, like, immediately right then and there, lumbar puncture, like spinal tap. And then within 24 hours, she had CAT scan and so forth, right? So quick, like that was a
Yes.
good positive experience at the hospital.
Yes.
PET scan we had to wait a little bit longer for, but let's say that, she'd wanted to get a PET scan right away. Is this like, would that have been a claim, Gino, assuming no pre-X and all that good stuff, right?
Absolutely. Yeah.
And could have done that locally potentially, because some diagnostics, I don't know about PET scan honestly, but some diagnostic services you can source locally if you're willing to pay. Some you'd like, maybe we would have had to hop on a flight to Minneapolis, gone to Mayo Clinic or whatever. Is that kind of the way?
Absolutely correct. Yes.
Yeah, perfect. Okay.
Yeah.
And so what's the sort of expectation on people to use like OHIP or, in my case, Alberta Health Services? Is there any expectation there? Does there have to be some waiting
No,
period?
that's typically, yes. So it is a requirement to have our policy. So we can't sell visitors insurance. We can't be that stand-in policy for new immigrants who come, to Canada, who are waiting a year to get onto the provincial healthcare systems, right? They can't buy our product, right?
Yeah. And that's good. I'm glad you clarified that. I guess what I'm thinking here is like, is there some minimum where she has to show that she's exhausted all the Alberta health resources before you jump into the
No. It's the client. It's the client's first. It's absolutely the client's choice. If they do not want to wait in the Canadian medical Canadian healthcare system, they have that choice, right?
Okay. Yeah, that's great. Thanks. And that's what I was expecting. I just I think it's worth clarifying that. So.
Oh yeah.
Okay.
We like I shared a report. One of the doctors there in Calgary office, like they're saying 4 years for a hip or knee replacement, right? By the time the surgeon sees it, so a lot of people going to the States to go get the procedures, paying. Oh yeah, it's a serious problem.
And I would see that goes back to underwriting then, because you don't want to underwrite somebody who's a year into their 4-year wait for their knee replacement.
Exactly,
right?
on a fully underwritten basis. It's exactly. I get one of those phone calls each and every month, at least one a month. And it breaks my heart. People call, "Hi, I just received my my critical illness money. I've been diagnosed with they give me the cancer name of some sort, and I'm like, I'm sorry, I can't help you. We're not a service company. We're actually an insurance company, but you mentioned cancer. I said, call John Hopkins, number 1 cancer hospital, tell them your condition and see what you can do, right?
That CI payout is still useful there. It's just not going to pay for what you're doing. So yeah, I got it. Yeah. Now what about travel? And you've already, properly clarified this is not travel insurance and not, so let's say that you do have a client who's traveling abroad somewhere and they end up with, you talked about your water skiing guy. Can you just talk about the sort of like how the travel insurer responds and then where ViewMe might come in there?
Okay, so if they have travel insurance would be first payer if it's something as a result of an accident, something like that, right? That case there with the water skiing, he wasn't traveling. He was actually at his cottage here in Ontario, So
I'm in Alberta, so again, water skiing equals travel for me because our lakes here.
Fair enough. So here he was, at his cottage, at his lake, so it's different. But yeah, so if someone is traveling abroad and car accident, they land in a hospital, right? They have 72 hours. They got 3 days to notify us, right? Someone, the family member should notify us, hey, father's here or uncle's here, brother's here, husband, let us know that, this is what happened. And, and they can notify their travel insurance company. They can notify us at the same time, right? Travel might pay they'll pay first, their first payer, and then we're second payer. If they were to decline coverage for any reason, whatever, then we would, of course, pay, right, in the event of something like that. Yeah.
Perfect. All right, I'm going to ask some questions here about plan design, and don't be shy to give details here. Our listeners can handle it. So,
no problem.
All right. So I want to look at, because there seems to be 2 sort of questions for plan design. It seems to be deductible and then the maximum claim. Is there any other plan design questions?
No, we have a few options that are only on the group that are available, because on the individual you can't really have too many options. Can't be it is what it is, right? Like our individual fully underwritten group, you do have options. So the individual is a fixed $5 million lifetime aggregate. That's the individual fully underwritten. Group, you have a choice of 1 million, 2 million, or 5 million of coverage. And these are always Canadian dollars. Okay, Canadian benefits, Canadian deductibles, Canadian premiums, right?
Okay.
So Like going from 1 million to 2 million is not double the cost. It's merely 8% bump up in premium. Okay. And going from 2 million to 5 is about a 10% bump up, right? In premium. But you have to remember on the group, it's per person per policy year. So every year it resets, every policy year resets fresh, 1 million or $2 million of coverage. But yes, you're right. Typically, groups, they purchase like the 2 million, because 1 million, it's Canadian dollars. You go to the States, that's 750-ish, 750 to 800, American. So that's 2.5, maybe 3 cancer treatments, right?
I know one of the things that I hear from some in that sort of international coverage space is that, the sticker price might be like $750,000 or whatever, but
Yes.
you have some negotiating power, and
We do.
Vumi's
So
obviously
yes.
yeah. So I might pay $750 as an individual, but you might be paying $550 or whatever, right?
Absolutely correct. Yes. So we're part of the Aetna, discounting, program. They're our partners, right? So yes, so we have the Aetna negotiated, rates.
Perfect. That makes a lot of sense. And I guess, so I look at this with my risk management glasses on here, and I think, like, why would anybody want a deductible smaller than 5,000? I guess, what's the premium trade-off there for the 5,000 deductible versus the smaller deductibles?
Well, Jason, you're absolutely right. You nailed it right on the head again. You've done your homework. You've looked at our rates. You've seen the individual rates. So yes, so 5,000 is the typical sweet spot, for this type of program. However, so we do see people in, we'll say, the high net worth market, where they sell their clients a very large life insurance policy, a very large critical illness insurance policy. So the critical illness insurance policy usually is designed to replace one's income, create an emergency fund, right? And probably give them X amount of dollars to go maybe to the US to spend to get fixed. But now they won't know where to go. You're going to be calling a hospital, say, hi, I've been diagnosed with this. Whereas if they have our insurance plan, and typically when they do those, I see those individual applicants come in with a $20,000 deductible, because they know they're going to get the $20,000 from their CI, offsets, pays for the Vumi deductible, right? And now Vumi will now take care, and now that gives them $5 million to go spend to get fixed. And we offer the fully, concierge VIP, service that we do offer, right? So they're going to be calling us, they diagnose with X, we'll do the research. We can get it. First of all, we can start off with a second opinion. We can find out what the best, doctors are in that specific area of medicine, possibly even go see these doctors, right? If they're, willing and able to accept a client like immediately, right? And it's all paid for, right?
And that concierge service, that's again something I assume that comes partly through, like, is that a head office thing? Is that an Aetna
our intake?
thing?
Yes. We, like, our company, there's over 450 employees. Right. So yes, so there's a full intake. When you call in the claims, you get triaged. Depending on what you're calling for, you're going to be speaking to, the correct person. So that's the way it works.
I was really surprised, and I don't know why I was surprised, but I was surprised to notice the number of countries where you have a presence, like a Gino equivalent. Oh, there's no other Ginos, right? But a Gino equivalent out there. So yeah, that's cool. And it makes sense for the field you're in. Now, you talked about sort of skirting around that $1 million threshold. Have you actually seen claims north of that $1 million Canadian threshold?
I have not. The closest I've seen, we did have one cap out where it was over $500,000 with the old company I was with, due to age. So he had a $500,000 cap. He was over the age of 70.
Interesting.
Right.
Okay. Yeah.
Yeah.
So yeah, I'm wondering about that, where's that sweet spot? So that's perfect. Yeah, that's good, thanks. So now, I have seen, like, and I don't know what your old company was exactly, sorry, but I have seen a few entrants to this sort of concierge care space over the years. And I've seen some that are not around anymore. I've seen some that I think are just kind of surfing along. Clear, like, you have a track record with Vumi, right? You've been, the company's been around for, I'm not sure how long, but I know there's
35 years.
There we go. And so what do you see as different here than other concierge providers in Canada?
Good question, Jason. So a lot of these concierge players, it's a smaller fee, $30-40 a month, and all they're going to do is just do some coordinating. Maybe it might include a second opinion, that type of service, right? It's not really much, but it still is a service. So it's a great little add-on to have. Like, I remember, I'm in the insurance business, so there's never such thing as too much insurance, right? Like, believe me, when we travel, I got group insurance. We buy through their credit card. You got coverage, and the wife still buys it. They're like, you want to make sure you're covered, right? Like that's what it is. So having, like you're saying, some of these little concierge plans and whatnot, they all do their thing. Ours goes over and above, right? Ours is not just a second opinion. It's the millions of dollars, that come with the funding to get you fixed. Okay. That's the key, right? And yes, and then, we do have the intake people who will facilitate, coordinate, let you know that, hey, you're going to be going to, you're going for a prostate procedure, the typical, they're going to want you there for a couple of days. He's going to want to see you on day 3 before he releases you. So right across the street from the Cleveland Clinic is, the Marriott. So, like, clients not going to know that, right? So our intake coordinate, they're going to work with you to let you and facilitate that with you, right? Ones that you see come and go, I haven't really seen any go per se. Like, I know the ones that are out there, but again, really that compete with us, not really that many. There's no, right.
That's fair. And just because you mentioned the Marriott specifically here, like, that would be part of your concierge care, is to say, here's a place to stay, here's where it's handy.
Yeah, so our group plan does include a travel option rider.
Okay.
That, so the clients can actually fly first class to wherever they got to go get treated. It's they have $5,000 travel stipend to use towards airfare and hotel.
Okay.
So
that'll get you most places. That's pretty good. Yeah.
Yeah. The little catch, the little fine print is it must be more than 320 kilometers away from their principal residence.
Sure. This isn't a vacation. So yeah, I got it. Okay. Now, do you think there's a timing question here? Like, do you think that this is something that people are coming more around to? Is there some trend happening where people are more amenable to this kind of coverage?
There absolutely is, Jason. COVID has, I want to say, it has awoken the giant. It brought the Canadian healthcare system in the forefront. Very few people know, and very few people are aware of the crisis like the Canadian healthcare system is in. It's the makings of a perfect storm. I'm not sure if you read the book Boom Bust Echo.
I haven't read it, no, but I'm familiar with it. Yeah.
Make a note, read it. Great book. So right now we're in the bust part of the economy, right? In the next 10 to 15 years, almost, at the current immigration trends, 45% of Canada is going to be over the age of 65, right? If you go to the diaper section in the Walmart and the grocery store, out of the whole aisle, 1/3 is for infants and 2/3 is for adults, the adult diaper. So that should tell you something, right? If you think the wait times are bad now, what's it going to be in the next 5 to 10 years? So being that COVID, shut down the hospitals, it's like, so the backlog and the strain and whatnot. So yes, it's the makings of a perfect storm. I think a lot of people right now, and not only that, even for to retain benefit, to retain executives, look at the MedCan and the Cleveland clinics of the world, right? These and the TELUS, health centers. There's new ones popping up almost monthly. There's Toronto used to have 2-3 of them. There's now 8 or 9. Okay. And they've grown substantially. Like, their membership bases have grown, almost exponentially. So here are people willing to pay, $2,000, $3,000 a year just to have a day with their doctors, and get a head to toe, A to Z, type of all in one day. These are the clients that will buy our product, right?
Makes sense. Yeah. And I mean, I'll speak to the 2 weeks that my wife had in hospital in February. I would say nursing staff was excellent. The doctors were excellent, but it took a long time to see, like it was often, you get one visit from the nurse in her shift, right? It was, yeah. So that is a lot of strain. And I think you're right that COVID has really exposed where there are gaps in our healthcare system. So yeah, that's fair. Now, what about the type of healthcare? So is there something happening where people are, more aware of the conditions that you would typically see claimed here? Is there some other rise in what's happening, like notwithstanding the aging population you already talked about, but is there some other change that's happening with, I don't know, comorbidities or whatever the case, where the type of stuff you would cover is more likely to actually be on people's radar?
Not sure. I'm not sure about that. I haven't seen any claim statistics per se. But for sure, like just seeing with the aging population, just seeing with, like where you're from, like in Alberta, where the population is already, a little bit average, age is higher and the wait times are such because of that, right? So, I will definitely see more claims around hip replacements and knee replacements than you will, like other traditional, type of claims.
And then what about, so you talked already about that sort of like that prevalence of private clinics. Do you see employers, I guess, is this retention of executive or retention across the board? Are there some industries where you see this play out more?
Absolutely. Yes. You're seeing that. You're seeing them wanting to offer. Mercer's put out a beautiful report about a year ago. This is what employees want, right? Listen, they don't want more money. They actually want better benefits, right? So when you see that, and that's, right across the board from the executive, and they're always looking, right, to try to retain some of that top talent, right? The C-suite executive class is typically, again, on a group where, our insurance plan is usually installed as a complete, standalone, right, separate, policy. And you see that, but now you want it because of diversity, inclusion, and so you want to see, you see that pyramid turning upside down. It's like they want to include everybody now, right? So now I'm actually seeing quotes where there's two classes. Here's the executive class, the C-suite, and then here's the other 38 employees. And give us a quote. So we're actually seeing that. We're seeing that trend sort of happening with the quotes that we're actually providing.
And then I don't know if it works against it at all. One of the things I hear from the group, like I'm a member, I think like you are, Canadian Group Insurance Brokers. And I see a lot of folks there who, like a lot of the members there, are coming back and saying, we're seeing a lot of pressure on premiums right now. LTD premiums are generally gone up quite a bit this year. Right. We're seeing a little bit on the extended health and dental side. Yeah. Do you find that increased premium on that side pushes against the willingness to commit premiums to a plan like this, Gino, or how do you manage that?
No, we're not seeing anything like that. Our groups are based on average age and demographics of the group, right? So ours is a blended age group. It increases year over year, 2 to 4%. Could be higher if there's a little bit of, increased utilization, in the plan. But and that's because the average age. But then you can also have a decrease. If there's more than 25% change in the census data, the average age of the group, if they're replaced with the same age, then there won't be any difference. But if some of the more senior people, elderly people were to return, they're replaced with some younger, you can actually have a price decrease, within our plan.
Fair enough. Yeah. Any other comments you should make about the group insurance side? I feel like, you talked about add-ons already. You talked about managing premium. Anything else that I might not be thinking about on the group side?
No, not really, because we don't get involved in that, right? Because again, we don't compete against traditional group benefits, right?
Yeah.
So a lot of people will use us as maybe like an extra layer, as an extra stop loss, because we do cover these cancer drugs and these biologics that can cost up to $1 million a year, So, like you do see some of the high end, group advisors, have us as that backdrop, as that emergency, stop loss, just like life insurance, it has every name in the book, right? Mortgage insurance, estate tax insurance, life and mortgage. So with even our plan, our insurance plan, I'm starting to hear just when I'm listening to the brokers who sell it and the consultants, it's like, oh, this is a major medical stop loss insurance. This is a, this. So it's funny when you hear the different names that people, call it, right?
Now, I can see that framing around it. That does make sense. And
Yeah.
I'd have to want to be careful. It's not full on because you have to go through a separate claims process. But that's a good. Yeah, I like that presentation.
Yeah.
Now, what advice do you have for advisors who are working in, and let's start with the family market here. So I want to think about, the presentation to that kind of middle income mass affluent market.
Family market. Family market, again, when advisors are there, like if you remember, this is like the fourth or fifth insurance they're going to talk about, because primarily it's life insurance. And then disability if they're self-employed, right? You get, they talked about disability, and they're talked about some investment income, type of products. That's number 3. Critical illness, insurance is number 4. Then some health insurance, like whether it be group benefits, whether it be additional top up, whether it be and then it's our product, our type of product. So and ours again is traditionally sold when the brokers are aware. And they can, and they sort of see the need, right? Because you're right, it's not my product. This product is not for everybody, but it very well can be, right? Not everyone wants to travel to be treated, right? I have a personal friend of mine, high net worth, got diagnosed with prostate cancer, and he's just waiting the game here in Ontario. And I'm like, go to the States. Your MRI is going to be less than $2,000. Go get that MRI so you have it quickly, right? Go get your guided, procedure, the biopsy, right? Because now he's going to be waiting here for that because they've identified, something. So, and again, that's $1,500. Go give that to your doctor here, so at least he has it, right? Refuses to do so. It's not about the money. It's about he feels like he pays a lot of taxes. He wants to wait, right? He waited, he had to wait, 3 months before this was, right at the beginning of COVID. He had to wait 3 months before he got seen by his doctor, and his doctor did his regimen. But, if it was me, I'd gone, yes, okay, I forget the fact that I have insurance, but even if I did not have the insurance, I'm happy to pay my $25,000 to go get treated, get fixed, get this thing out of you, eradicated, taken care of, right?
I guess that's a stress tolerance question, right? So how much stress does it?
Good point. Yeah, exactly. Right.
Yeah. Okay. So then what about now you mentioned your high net worth friend already. So, but what advice would you have for advisors who primarily deal with high net worth?
High net worth clients? Market, they travel, right? So here's our plan that, sometimes, and as you get older with age, you all know when it comes to travel insurance, you have stability clauses coming into effect, right? You got to be stable 60, 90 days, no change of medication, no doctor checkup. So now when you have our plan, you don't have to worry about something like that because we don't have a stability clause, right? So you have your international private medical insurance, because that's essentially what you're buying, right? You're buying your own healthcare insurance plan, right? Where you can be treated abroad, anywhere in the world, wherever you'd like to be treated. We're going to pay for it, period, right? That's what it is, right? So in that high net worth market, they're typically, the employers of the world, right? They usually own a business. So, and I speak to advisors and they're like, oh no, but I don't do group. I say, okay, but your clients are, high net worth individuals. They probably own yes, but I only handle their individual. Then they see how easy our group is, right? Just, get his information for him and his executives and, the minimum 3. And typically all of a sudden you get these individuals, doing group because they see how easy it is, right? Like 1-pager application and enrollment form for each of the people. And because they don't know about like traditional group benefits and how to market that. And then when they see it with our plan, how easy it is, we give a proposal. It's simple and easy to install. And
right. Can I just chime in for a second with the premiums question too? When I'm thinking about premiums here, should I be thinking about like tens of dollars per month, hundreds of dollars per month? What's the rough kind of ballpark for premiums?
$100 per month, $200 per month, average premium. So
That's
let's take me, for example, individual, fully underwritten.
Yep.
Here's our rate sheet, right?
Oh,
We
nice.
have 7 choices of deductible. So I can pay as low as $1,100 a year.
Yep.
And that's with a 20K deductible. And these are the rates that are from 50 to 55, in that age group, or I can pay as much as $3,000 a year. Right. So anywhere between. So it can satisfy anybody's budget.
Right? And are you doing so you're going to be annual renewable on that? Is it, or does
annual.
It increase on the,
yeah.
Okay.
Yeah, that's annual. Yeah. It's an annual rate. Group, your average group where, based on average age, your average group price is in that $2,000, depending on the deductible. Again, with that $5,000 deductible, average $2,000 per year.
Yeah. Okay. That makes sense. And flipping back then. So what about advisors working primarily in retiree markets? Does the pricing work when you're into your 60s and 70s here?
Yeah, it does. It absolutely does. I can share some rates with you. Yeah, it's 60s to 70s. You're now average premium is $3,000 a year.
Okay.
Right. So it goes, yeah.
Yeah. And that's a stage when you're, more likely to have to use it, right?
Absolutely. Absolutely. Yeah. Harder to get because now you got to give us your medical if it's individual, but on a group basis, again, when you have no underwriting, it works well.
Would you see ever a problem there? Because, one of the questions when you're traveling is, have you been advised by your physician not to travel? Like, can you run into that sort of catch-22? Is that a problem?
No, because once you have our plan and once you're past that 2-year, waiting period for anything, if it's, pre-existing, you're, we got you covered.
You're going to travel to get healthcare, and it doesn't really matter that. Yeah, okay, that's fair. Because you're not dealing with an emergency medical travel situation. So, yeah, okay, yeah, perfect. And then what about the group folks? You said where you're doing more business here on that group side, and you've already talked a little bit about positioning this.
Yeah.
So what about the group benefits advisor here? Gino, what should that person
advisors,
be thinking about?
that's 70% of our business. Where they'll just, send us an email, Gino, please quote, please see the 7, execs, data, please quote, all deductibles, all options. And, we send them off the quote and they just, build it into their next year's renewal and show them, and typically it's, they're getting there's what they call a lot of low-hanging fruit in our industry. It's very well received product. It's one of those policies. It's like that, we'll say that greedy person's insurance, like a critical illness insurance. Everyone wants it, but no one wants to pay for it. So the fact that they know that they're covered in the event of something were to happen, it's that warm fuzzy feeling, and then with plans like individually, they can run it through their PHSP, so they can use their, healthcare dollars to pay for it. Individual. On a group, it's 100% tax deductible, non-taxable benefit, right? Except for Quebec, I must say that everywhere in Canada,
Of course,
yeah, except for Quebec. But yeah, so it's almost like a no-brainer. Right? Groups, the group guys, they're having a lot of success with this.
And then my last market question here. So what about advisors who deal with travelers and snowbirds and such?
Yeah, so travelers and snowbirds, again, it's another market where, you get a lot of people who get landlocked, and what I mean by that is they're not allowed to travel, right? Because, their blood's, out of whack or, they just because of stability clause, right? So if they have this insurance, right, before their healthcare, starts to go down, they're covered. Now they don't have to worry, right? So you get a lot of people, and these are people now that I know they've had to sell off their places that they had in Florida, or now the kids have sort of taking it over, and they're thinking of selling it off because their parents can't go there anymore because it's how prohibitive, how expensive their travel insurance is. Because typically they would go winter there, from January to March, right, just to avoid the cold Canadian winters, and it just didn't make sense for them to pay, $5,000 or $7,000 a year, for travel insurance because of some of their ailments that they had, right?
That's fair. Yeah, I'm with you. So then, is there anything else that we should be talking about here, Gino? Any sort of thoughts around the product we missed or around the clients who might buy it?
No, I
Positioning
think
for
it was.
advisors. Okay. Yeah, you've been pretty comprehensive, Gino. I do appreciate that. I
Okay,
like the
good.
rate card right on hand there. That's nice.
All
So
right.
yeah, that's old school. I like it. So all right. On that note, then, Gino, thanks very much. I really
Thank
appreciate you
you.
sharing this, and I was grateful that you took the time when we were at KLU back in May to introduce yourself. That's
Yes.
yeah, always good to make those connections. So thanks so much, Gino. Enjoy the rest of your day.
Absolutely. Thank you very much, Jason. It was a pleasure.
You know, I love when somebody goes into detail like that, and Gino was not shy with his detail. So good stuff. The number for today's episode, the number is 9. The number again is 9. Okay, I've got about 15 minutes here where I'm going to have some chance now to let forth. So first off, I just want to give kudos to Ian here, Ian, regular podcast guest Ian, who's been on a couple of times with us. He and I met recently, I guess that was a few months ago now, and he mentioned that we had a guest on, and I quite like this episode as well, but we had a guest on who made a comment about insurance agents being fiduciaries. And I would just remind you that by default, by legal default, an insurance agent is not a fiduciary. There are things that can happen that can make an insurance agent a fiduciary, but by and large, that pretty high bar for Canadian professionals isn't met by an insurance agent's licensing, nor by a financial planner. Really, you have to be a trustee or an executor, that kind of thing, in order to get into that fiduciary position. You can end up there sort of by accident if you deal with particularly vulnerable clients, or if you hold out as a fiduciary, well, then you probably are a fiduciary. Okay, the next thing I want to talk about here, so it is the 5th of October, been about a week now, and about a week ago, oh, sorry, one other thing before I get to this is Gino made a comment on the call about Alberta being an aging province. In fact, Alberta is the youngest province statistically. What Gino was referring to, though, was not specifically an age issue. There's a CBC article he had pointed to, and he and I chatted about this a little bit afterwards, that talked about wait times in Alberta. And it made some inferences, the CBC article made some inferences about this being a sort of age-related issue. So I can see where Gino made that connection. Again, the article is linked, so you can read through it. It doesn't specifically point to Alberta being an older province, but it does make some, I guess, implications in that direction. So anyways, you go to the show notes and you can read that, but I would just clarify that Alberta is quite a young province, actually. Lots of young folks come here for work, and I guess more folks are leaving Ontario now to come here too, at least as of October 2022. Hey, you're welcome out here. I'd love to have more Ontarians out here. Okay, so the review here, FSRA, this is something with a long history. So about a decade ago, the Canadian Council of Insurance Regulators, which is sort of the national organization where all the different insurance regulators get together and say, is the industry working right, or is there stuff happening that's offside here? And they really started looking at whether or not the insurance industry was taking advantage of consumers in a way that the securities industry cannot. And I think there's more to follow here. This is something that has shown up previously. This is not just idle speculation, but I think it's not too long now before we see seg funds with regulation more like what we see on the securities side. Maybe a little bit of responsibility to know your client, know your product, which again is a moral responsibility, but there's not really a legal responsibility to know your client, know your product on the seg fund side. And I think I've heard this a few times lately too, concerns from regulators about folks who go insurance only and then are working on a referral arrangement or that kind of thing. And still, I would suggest doing securities business, but operating without a securities license. And I know lots of folks like that. There's probably, I think, 4 or 5 people who've been on this podcast who work on that model. I would just caution, if you're working on that model, be prepared that it's likely, and maybe this is speculation on my part, it's likely that one day you're going to have to go back and get a securities license. And I don't think that's the worst thing. Just be prepared for it. Have to maybe write that Canadian securities course or whatever the case is. Okay, so circling back to the insurance side, on the insurance side then, about a decade or so ago, we started to see the Canadian Council of Insurance Regulators, the CCIR, sort of sniffing around and saying, we think that insurance regulation is kind of missing the mark. And we have seen some concrete progress here. Saskatchewan has very robust bylaws, for example, that insurance agents have to follow there. But most provinces haven't done a ton here. We do have little odds and ends. I would say the Insurance Council of BC has taken on some questionable sales practices through its disciplinary proceedings. And that's good, but it's not big picture sort of structural. So now, about 3 years ago, the CCIR came out with the FTC, the Fair Treatment of Consumers, and this is really a principles document, and it gets us part way on that in that area of sort of what do we expect insurance agents to do when working with their consumers, things like cost disclosure, proper training, just again, stuff that we see sort of by default on the security side and not necessarily on the insurance side. Now, where has this brought us today? Why do I mention this today? Well, in the spring of 2022, there was an announcement from FSRA that they were looking at some sales practices, some stuff that was maybe a little bit offside in terms of training for agents, and then what that was leading to in terms of products being sold. So now, and I'll put the link to this in the show notes. Last week, FSRA released a very detailed report, and it outlined, I think, what are some, I'm going to say, compliance failures. I think we could point to really almost a nil compliance activity. And as an example, my favorite statistic out of this whole report is out of 3 MGAs, 3 pretty big managing general agencies. So MGAs, of course, are where insurance agents will process most of their business today. I know not everybody works through an MGA, but most individual life insurance and even a lot of group insurance business is processed through an MGA. So we have in 2021, we have 27,000 agents represented by these 3 MGAs. That's a lot of folks. And we have reviews conducted by, so there's supposed to be regular training activity. There's supposed to be some sort of compliance activity. There's supposed to be supervision of new agents in their first 2 years in the business. And we see that 27,000 agents licensed. These are presumably people who are out selling life insurance, and the MGAs responsible conducted 0 reviews. Insurers, most of these firms deal with 2 or 3 insurers. You have a pretty narrow set of insurers dealing with them. And we have 26 reviews conducted by insurers. And I love this. It's like somebody at FSRA is clearly trying to make a point. 0.1% of agents reviewed. Yeah, I can see that. Thanks. So I thought it was, I don't know, kind of a funny statistic to add at the end, that percentage. We get it. 26 out of 27,000 is not very many. In 2020, there were 19,000 agents represented at those firms, 56 reviews conducted. And in 2019, 16,000 agents represented by those firms and 19 reviews conducted. Essentially compliance activity, at least structured compliance activity, from what we read in this report, is pretty much non-existent, okay? And the specific sales practice that they pick on in this report is the use of insured retirement plans. And I think insured retirement plans have their place, but I don't think this is the place. Specifically, what the report says here is that it's being sold to folks who make modest incomes, $50,000 or $60,000 a year, and instead of prioritizing the RRSP, they are this insurance product is being prioritized. And the idea here, and you know, I get the concept. Obviously, I understand what an IRP is that you're going to build up that insurance cash value on a tax-deferred basis, tax-exempt really, and then one day in retirement, you're going to leverage against that, and you're not going to have to pay tax on it because you're taking a loan, and then at death, your insurance policy would pay off the debt, and you've essentially gotten the benefit of tax-exempt growth all along. And then I'm going to say tax-free, although I don't like that phrasing, tax-free income in retirement. That's certainly what the sales practice around this would be. The problems here, I mean, the first problem is you're setting up a strategy where somebody is borrowing a lot of money in retirement. And I don't really like that concept. Just on its face, the idea that you're going to take out a giant loan in retirement. I mean, there's all kinds of things that can go wrong with this. What if you don't have capacity? Okay, just think about what goes wrong as people go into retirement. So I don't like it that way. And now, fine, if it's like the fifth thing, if you've already got your RSP maxed out, TFSA maxed out, RESPs are good to go, you're using some non-reg, maybe your corporation, IRP fits in there somewhere, and it can, absolutely it can. I'm not saying we should never be using IRP. The other problem I have with it is that most often these are going to be people with families. These are going to be folks who have young children. And then you get a question of, if you put money into an RRSP, if that's your primary saving strategy is the RSP, you're going to get a tax deduction. And when you get a tax deduction today, you get an increase in your Canada Child Benefit. And if we're talking about somebody making $40,000, $50,000, $60,000 a year, that Canada Child Benefit is meaningful. You get a real bump, depending on the number of kids, to your Canada Child Benefit. So it's just not sound from a financial planning perspective. And then the third is, a lot of these folks would end up not staying in Canada. There's a heavy dose of new Canadians here. And if you have somebody who buys a universal life policy and they're here for 12 years, and then they go somewhere else, that policy is now potentially subject to different tax and legal regimes. You might not be able to fund it anymore. You might have a tax treatment in that other country that doesn't respect Canada's treatment of that policy. Just too much to deal with there. All right. So anyways, I'm curious to see where this ends up. I think FSRA has been a little bit toothless on the financial advisor and financial planning side, but maybe they can demonstrate a little bit of heft here. We'll see where this goes. All right. Thank you very much for listening and or watching, and enjoy your continued studies.
Hi, if you're listening to this episode and you're not already signed up for CE credits, this is a very easy thing to do. Just navigate over to businesscareercollege.com and you're going to sign up here for CE. Just subscribe. Currently, the pricing is $200 a year. We may be introducing monthly pricing at some point, but as of today, we have a cost of $200 a year. And once you're signed up, then you can just go and listen to every episode within your subscriptions. So you'll use once you're logged in, you'll use my subscriptions here, and you'll just go to the latest episode, which you'll scroll down to very near the bottom for. It doesn't matter which episode, you just scroll down and you find the one. So as of the time I'm recording this, the most recent episode is season 4, episode 27. I can just start it right from here. I can do the quiz here. Once I'm done the quiz, then I can get my continuing education certificate. Very straightforward. So I would just launch the course here, and I can watch the episode from here. Now, if you happen to be already listening to it on YouTube or whatever the case is, you can just navigate right into the quiz. You start your quiz, and you're just going to go through the whole thing. And then at the end of it, you'll be able to see your certifications. So we're going to bring up designing small group products. We bring this up and we click on wall certificate, and that's going to give me the CE certificate I need in order to maintain status wherever I happen to need CE credits. So I really do encourage, I know that out of our regular listeners, about 40% of you are listening to the episode for CE credits. That's about 60% who are listening out of general interest or whatever it is. And I really think this is an easy way to get your CE credits, $200 a year, pretty reasonable price. And as you can see from the certificate here, and as you hear me discuss at the beginning of the episode, we have a broad range of approvals for all of our courses. I'd like to thank Joe Tong. Joseph is our editor, both for video and audio content. And Joe does a lot of good work to make sure that these episodes look and sound good, despite my better efforts. I'd like to thank Maria Nguyen. Maria makes sure that the episodes all get approved for CE credits. Veronica Thibert does the quality assurance through that process. And then we have a strong marketing team
that makes sure that all of our content gets out there so that people can find us and take advantage of learning opportunity they might not have known about.